Today, folks, we're doing a deep dive into my $369,000 dividend stock portfolio comprising of ETFs and some individual dividend stocks, and through the lens of Portfolio Pilot, a free online portfolio tracker created by Global Predictions, is going to give us some clerical insight into how my individual stocks and ETFs overlap, breaking down the individual components. We're going to run some simulation back tests to see how my portfolio would have withstood past crashes, and I'm going to show you some of the other features of this platform. If this is a conversation you guys think you'd appreciate, hit that like button, and you can check out this Portfolio Pilot tracker. I'm going to leave the link in the description below as well. So just getting into the dashboard, we can see a few things: my net worth, the portfolio score, the expected performance, and this wonderful little heat map. Now, the net worth, I do not include my cash in this position. The portfolio realistically is around $395,000. I'm continuing to stack cash just to be patient with where the market's currently heading. The portfolio score we're going to talk about in a little bit, but I do love this heat map breaking down the recent 30-day performance of my largest positions like VOO, VDY, SCHD, we got VYM, those four ETFs comprising of most of the portfolio, with some of the individual holdings like Ryokan, Smart Centers, Fortis, and TELUS. Now, before we get too technical, I just want to show you the individual holdings, because what I love about this tracker is it's going to take all my ETFs and individual stocks and actually break down the individual holdings and what overlaps, and it's going to comprise the largest individual stock positions, which is at the very top of the list. We got Royal Bank at 4.9%, we got Toronto Dominion Bank at 4.4%, and Enbridge at 3%. The reason these are the largest holdings is because of my ETF VDY, which largely top weights some of the largest Canadian stocks. But as we move forward, this is where we can start seeing things like Ryokan, Smart Centers, we got Apple in here, we got Canadian Natural Resources, we got Bank of Montreal, Bank of Nova Scotia, Microsoft. So we can kind of start seeing how those tech companies from VOO start to kind of intermingle with VDY. We got Suncor in here, TC Energy, BCE, Canadian Imperial Bank, which recently posted earnings and is getting hit pretty hard. We got Fortis, guys, and then the list kind of comprises down into some of these like Johnson & Johnson, Tesla, a good mix going all the way down into being such small components. The rest make up about 41%. Now, from a sector basis, the reason I like looking at this is it gives me a better understanding of how I can continue to diversify, because I'm heavily exposed to the financial sector at about 27.4%. I want to get this below 25, with the second biggest exposure in energy, which is probably what's cushioned the performance of this portfolio the most. We got information technology, healthcare, communication services, and then just some of these other smaller listed sectors like utilities, industrials, consumer staples, etc. Now, from a country standpoint, I am about a 50-50 split between the US and Canada as well. But scrolling back up, I do want to talk about some of these extended features here, guys, and some of the stuff I've talked about in the past that I absolutely love. If we go into the actual kind of overview here and take a look at some of these tabs, we have something called simulations. And I want to start with this first and foremost because it can actually back test my stocks and my current positions on how they would have performed through past financial crises, whether it was the dot-com bubble, 2008 financial crisis, or even the recent pandemic. So we're just going to run this simulation briefly, and if we scroll my head out of the way just a little bit, we can actually see how in the dot-com bubble, how long it would have taken my positions in these sectors to actually return to a baseline after the crash. And according to this, it would have taken 4.3 years for my stock portfolio to recover against the S&P 500 that took 6.7 years. And in the global financial crisis, 3.5 years for my portfolio, 4.9 years for the S&P 500. And in the current pandemic, 0.7 years that passed through March 2020 there, guys, and on the S&P 0.5 years. So in the pandemic, my portfolio would have taken a little longer to recover, and that probably would have been due to the fact of my energy exposure, but it's nice it gives us a little bar chart down here as well. Now, going back into the overview, I want to break down some of the other features, because when you're signing up to this, guys, it's going to ask you some questions, and again, it's completely free to sign up to, but it takes into consideration your own personal risk tolerance, and then it takes a look at the volatility of your individual positions, and it'll give you a portfolio score, which if we go into analysis, it'll actually break down this portfolio score and tell us how we can better diversify and how to adjust our portfolio, better adjusted for our risk tolerance. We got asset class diversification, country diversification, sector diversification, interest rate risks, and so much more. And if you do sign up, I believe within the next few days, you still get the gold feature, which if you come into recommendations, it will tell you the little things you can do to improve your portfolio to, again, your best adjusted risk tolerance. Now, they did offer a new feature that's coming out for taxes, which if you sign up, this can automatically pull all of the data out of your brokerage account seamlessly, so you don't have to individually put in all your stocks. But if you want to, you can individually put in the positions as well, which is what I have done. But let's say you put in your Wealth Simple account here, guys. It'll actually pull in the gain, loss, and perhaps the dividend income, and actually give you kind of an estimated tax calculation, which is absolutely useful in my opinion. But outside of this, we do have some other tabs. What's really cool is at the top right here, we do have the Economy Explorer, which does give us a brief overview and a dashboard of what's going on in the economy, with like the 10-year US Treasury bond here, guys, at 4.9%, the likelihood of a downturn from analysts sitting at about 71.7%, according to the recession in the US, people predicting over the next 12 months. We got global unemployment here, guys, global inflation, and that's just the start, because we do have things like Security Explorer, which is really cool, kind of breaking down currencies, ETFs, in mutual funds if you want to look at some of the Sharpe ratios or the expected returns. You got financial markets, G20 macro, you've got the anomalies, which I think is really cool as well, breaking down, you know, breaks and trends across multitudes of markets and stocks. And again, you also have these ETF screeners as well. This has just been a really intriguing platform that I just find surprisingly is actually free to use. It's fun that it gives me a little forecasted return here as well. But I'll pass the question off to you. I'd love to know what you guys think about this. If you sign up, again, it's completely free. The link's in the description below. I partnered with Global Predictions on this video because I just believe it's actually a really great platform. So I'd love to know what you guys think, but stay cool, stay awesome. And as always, I look forward to catching you in the next one.